Well, good day all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, and this is the 28th of March, 2022, about 7:35 in the evening. I'm late today. I made a bunch of changes on charts. You've had it happen. They didn't take. I don't know why. I know I hit all the buttons right. But we've changed, and we're now looking at the February Brent. We're looking at January's as we look at the nat gas and some of the products, and the crude will stay with WTI the way it is. March bonds and notes, we move to the March contracts. Metals, you've got to move on. So I've got March silver and copper, February gold. It sounds like just a few things, but it's a lot of chart work for me to do to bring it up for you. Now, let's talk about a few things, and I'll get right back to the markets. We are having our annual Cyber Week sale. This is it. This is the last big sale of the year for you. What do I offer? A 1-year subscription to any of my research products. In other words, my morning subscriber videos, either the Spider or the futures market, or the full research where you get my written commentary along with them. How does that work for you? It's pretty simple. You can then choose from one of my 3 courses. The full charting course, a $300 value. The new outside day course, the enhanced Bollinger Band course. Any one of the 3, yours to go with it. In most cases, this covers most of the cost of a subscription. I mean, that gives you an idea. Certainly with the charting software, it's over the value of it. So it doesn't happen often. I wanted to get it out right now, and the response has been pretty good already because people realize when I say something, I stick with it. So again, you can choose any one of the courses with any 1-year subscription to my market research. And you'll find, I think, that it works out pretty interesting on the dollars. How do you get it, by the way? Just take your cursor at any point, move it up to the top here, and you'll see an icon, give it a click, it'll take you right into it. If you're on my mailing list, I've already sent you a mailer for it. Okay, so let's take a look and talk the markets, because I got snookered today. I did not expect the big break in the market that we had in the stock indices. I didn't expect the dollar to come back. I got snookered, okay? I still can't exactly figure out what set it off. I expected the reaction from China, but if you understand China, the government's not going to give in to the protesters. They'll crack down, or the protesters will realize as they see the barricades go up on streets, they're just looking for a problem. People have phones, people have cameras, government does too. They'll take the picture, they'll find that person, you'll see what happens. They're already walking around today in Beijing and Shanghai, I understand, stopping casually, just people. We want to see your phone. They want to see if you have a VPN on it, which takes you off the government network. So there's a lot going on, but it's not going to be a crackdown the way you think it is. They'll rein it in. There's a difference. What are the people protesting about? Being locked up 24 hours a day for weeks at a time. Do you blame them? It's very different than taking away other social liberties. So I think that there's going to be give and take. What I pray happens is the government, it's already got a 20-point program, speed it up, give a little more latitude to the people, and put an end to this and let the economy get back on its feet. For 1 second, I don't believe there's going to be an overthrow of the president. I mean, you get protesters. There's always in America, any country, they're always doing something. But this protest is a little different. This is about being locked up for 3 years now. Doesn't make sense. The zero COVID tolerance policy that they have doesn't work. It's time that they accept that, and I think you'll see as fast as this came on the boards for us and hurt the market, it'll change. What really hurt the markets today, I think, was the Fed speak. James Bullard coming out, Mester coming out, Williams coming out, one after the other, just continuing to say what I've been telling you here. We don't have to stay with 75 basis point hikes, but you're going to stay at 50s as long as the inflation is running hot. If it slows down, they might go to 25, but it's the duration. Nobody knows when they're going to stop hiking because they've got to get that inflation number down, and it's got to fall down in a big way. Now, the biggest problem facing us right now is going to be what's the jobs data going to show on Friday. The market is looking for a reduction to 200,000 jobs. I think it was 260 the last report. So they want to see a good size reduction and they want to see that work. The fear is the labor market is so strong that you're not getting those big reductions. And that can lead you to the stagflation for next year that you got to be worried about. And the markets are going to be discussing that in a big way. Okay. So when I come to the S&P, you still have upside biases. You're over on the weekly area chart, the 18-week moving average of closes. You're 50 points from it, but the market is still there. You've not really done damage on this chart. You've been stuck in this range right here. Is it a top or is it going to be a leg that you move higher to, maybe up to the 4,200 by year end? That's going to be the big question. On the pullback, did you do any damage on the swing line? You did not. You have higher lows, higher highs. Did you do any damage on moving averages? No. You're, in fact, getting very close to getting a bullish crossover if the market can rally from here. Big if. I don't know. You could also get what's called a kiss. What does that mean? It means that the 18-day average just skirts up to the 100 and then skirts back down. That would be a bearish situation. So you need to get up and start challenging this 200-day average. The Bollinger Band's not in play. The bigger resistance is going to be the 200, and the big supports, 39, 33 and a half, let's call it, to 39, 29. That's going to be your support zone in the market. Now, let me give you the danger. You're flirting with losing the embedded reading. A reading under 79 causes it to be lost. Did it get lost on the close of business today? Let me walk you into that. Here's the close of business Monday. Nope. 82 reading. It's too soon right now to know if it's going to be lost for Tuesday trade. What you don't want to see is extended lows. You want to see the market hold it and start coming back up. That will bring the market very quickly over that 79 level. It's going to be an evening where I'm not comfortable. In the NASDAQ, you never did have the embedded reading. You got overbought and you're trying to correct that by coming down in price, void of a trend. Lower low, higher high. Micro mini Dow. You're flirting with losing the embedded reading. Now, let me walk you into this, all right? Ready? So here we go. Close of business today, day before you're fully embedded. You've had it for a while. And even with a good reading of 84 today, you're losing tonight by the market being basically, where are we right now? Up 4 points, you're losing the reading. You've got to get this market to, just like in the S&P, not get down there. It needs to give a pop to the upside overnight and early morning. That would get the market out of the woods. If not, and the market loses this reading, the 18-day average 33,486 comes into play. You're already in support in the Russell. This is not the prettiest looking chart. I thought the 200-day average in the Bollinger Band, and I said it here tape after tape, would be stiff resistance. It proved to be that, but I don't know that there's downside. I'm sort of caught in a funny position. You realize if they get 200,000 jobs, the market's going to, I think, be happy with it. Why? It means things are going in the right direction. They don't have to all crash at one time. Get 240,000 jobs, and everybody's going to say inflation's going to be real sticky. This is the problem we're dealing with this whole week. And by the way, Fed Chair Powell will be speaking on Wednesday. What's he going to say? Well, he's not going to say anything other than what we're seeing the other Fed people coming out now and saying that you can't give up on the fight. The Fed's going to stay with it. It's not going to pivot too soon. It's going to stay longer rather than shorter, making sure that this inflation genie goes back in the bottle. That's what you're going to hear from the Fed chair. That's what I predict. VIX, in this whole breakdown today in the stock market, you still are keeping a bearish VIX. A bearish VIX means this is no more than a rally that if it fails and doesn't lose the embedded reading, then today was a false day, in theory, for the stock indices to the downside. I pointed this out this morning to my traders as the market was coming down, as I was doing the Spider ETF video, and said, there's something very confusing here, and I'm still confused, I admit that. In the T-bond market, you can see that you've still got your embedded reading, which tells me on pullbacks, what are the pros doing? They're going to continue buying. The curve yields could go to that 100 level we started talking about here in March, when it was at 20, 22, and now it's pushing 80. And I wouldn't be surprised if you go to the 100 level, because the Fed's going to stay on this game longer than you think in the short end. And they could kick that up to 5.25%, 5.5%. But the back end is saying, we can go into a very bad economic situation, stagflation. Nobody's talking growth of next year, by the way. I don't see one analyst saying, 2023 going to be a year of growth. The question is, how do we get out of this quagmire that we're in? And most people think it'll be the better part of the year, if not the whole year, to get that done. That's right now. Do I know that that'll work? Let me tell you, when people make year-end projections, I start laughing. All right? It's hard enough to tell me what's going to happen the next day or two to project that, and now you want to go out a year? Why? That becomes the problem. In any case, higher lows, higher highs still embedded here. These numbers are still bullish, which means the market has got bets that interest rates are going to stay low and go lower on the long end of the market. In the dollar index, as you can see, this market is fighting a battle. Now, the battle that it's fighting, if we can get back a day here, and I know I can, is you lost today and didn't stay with both numbers under 20. They were under 20 on Friday, both numbers. They were both under 20 on Thursday and the day before. So you got over 20. You need to be over 21 to lose the embedded reading. You're trying to do that now. But if you fall much from here, you won't. Was today a fake out? That's the problem I'm having. The good news is in the euro, I told traders that were with my Spider ETF, get out at the market because you were up to the 200-day average. Should have followed my own advice in the dollar index and said, hey, 40% of that is made up of this. Maybe you shouldn't be hanging around the short side. I overstayed my hand being a bear today. I admit it. In the British pound, you're still with an embedded reading. Until you lose that reading, I'm basically still in the bull camp, okay? So I think the pros are buying these breaks, still looking for the market higher. You know, we keep hearing there's going to be a showdown. Mr. Sunak's going to lose a lot of his backers because he's fighting with wind power right now as to where it should be based, on land, at sea, and how does it work, and who's going to get what. Everything he's going to do is going to be a fight because he's holding on to a majority that's this big. That is going to be his problem as long as he's in office this go around. So the market's going to understand that, and the question is, what does it do with it? In Bitcoin, another one bites the dust, one of the crypto lenders today. So you're just, it's one after the other. Is this market still in the washout and it's not over? I'm hearing people talking 10,000. All I know is my work is saying you're oversold, you're not trending, why be involved? That's what my work is saying. In Brent versus WTI, you're back down. Look at how you've come back from there all the way down here. You do know December 4th is when the OPEC Plus meeting takes place. We're supposed to know what the European price cap is going to be before then. They walked out of another meeting today with big discrepancies as to what it is. Poland, Lithuania, Estonia, they want to see a $20, $25 cap. Greece and other shippers want to see $65 to $70 price caps. The European Commission, not the union, the commission that represents the union within itself, came out and went from a $65 offer to a $62, and that was not accepted. But they also explained how this would work and how prices can move within what they're proposing. Let's see if they get closer on that tomorrow. They will reach a deal. I just don't know what the number is. In Brent versus just Brent, You keep hitting the lower Bollinger Band, bouncing from it. But it's a classic bear. Now what you're doing is you're getting the possibility of that gorilla glue trade as you come down. What would a cap do? Or what would no cap do? No cap could easily set oil on fire. Russia stops producing. They're not going to do anything. They can't get insurance. Nobody can buy it in Europe, blah, blah, blah. You start taking that off the marketplace. Who knows where this goes? The U.S. seems to think no cap is going to be bullish for prices. I haven't figured out if it's bullish or bearish. How's that for honesty? I can make an argument both ways. I don't know. You're doing the same in WTI, riding this band to the downside. Heating oil, the same thing. They're all in the bear camp and they're embedding, so they're getting weaker. I read today that New York is talking natural gas prices are going to go up on everybody there because they've been higher. Well, actually, they're down. From the summertime, this was near $10, and now you're sitting here 30% lower. Why is it going to be so dramatically higher, I guess is the question. If you're comparing it to last year, yes. But if you're telling me that just because of the current bounce you've had, I'm not quite understanding it. But there's a lot of things I don't understand. So I want to remind you, we've got the special sale. All you have to do is take your cursor, move it up to the top. You'll see an icon appear, give it a click, and away you go. I'm Ira Epstein. I'll see you tomorrow.